Okay, I want to talk to you about what could be the perfect Bitcoin storm. Bitcoin crossing into where everyone's been expecting it to go for so long, the $100,000 to $200,000 range, and the perfect storm of factors that is contributing to that. Now, also, we know that we're pretty degenerate on this channel. We're not just focusing on Bitcoin. I'm going to show you exactly why if Bitcoin crosses the $100,000 mark, you can do 10, 20 times better returns on your money by investing in something like crypto gaming. We'll get into that in a second. But first of all, Bitcoin. It's crossed 48 grand US dollars. And if we zoom out, I mean, it's almost been a little bit sneaky here, heading down from a low of 16.8 back up to 47.8. He's closing back in on those all-time highs, but there's a bit of a difference. The search volume for Bitcoin and like the talk in the mainstream is nowhere near where it was in 2017. So this is Google Trends. And this measures how many people are actually searching for Bitcoin. And in 2017, it peaked out at its max. It's a relative scale. It doesn't give us exactly how many searches there were, but this is the maximum amount of people searching, and everything falls below that. But despite having 2/3 of the amount of traffic, the top here on Bitcoin was about $18,000. And the top here on Bitcoin was about $60,000. You can see the corresponding spikes here, about $18,000 down here, and then this spike here, about $60,000, and then it did obviously head up towards the $70,000 mark, and that would be the second spike here. But have a look at where we're at right now. Just 17% of the search volume is going on for Bitcoin. Way less people, way less searchers looking for it, but have a look at where the price is. This is a way more sustainable rally because you don't need, if you have a look at the original one here, how quickly the mainstream fell away and then how quickly the price absolutely plummeted. So now we're looking up and to the right on a more sustainable trend. And I want to show you the best theories of why. But before I do that, let's get into something a little more degenerate because you may recognize the crypto whip. This is a very professional graphic I personally have whipped up for you. And you can see over here on the left on the handle of the whip are tokens, the biggest token in the world, Bitcoin, Ethereum, Binance, XRP, Solana. These are the big caps with the billions and billions, almost $1 trillion in Bitcoin now, inside their market caps. And down the other end, we have things like ExceedMe, we have things like Arfox, Network, all these tiny games that have, I think ExceedMe has like a $5 to $10 million market cap. And so what happens, and this is the theory, and this has played out historically, and it's probably going to play out again and allow you to 10 or 20x the returns that you're actually getting when you're investing money in crypto. What happens when you crack a whip? Well, I've never personally cracked a whip, but you move the handle. And so the handle moves first, and that's Bitcoin. But what's the fastest moving part of the whip? Where's the part that actually like breaks the sound barrier and goes smack? Well, of course, it's at the tail end of the whip. And so Bitcoin, in this analogy, is moving first, and it's moving the least distance. And then as you get down that whip, the smaller market caps are going to move quicker. They're going to move after Bitcoin, but they're going to move quicker than Bitcoin, and they're going to go higher than Bitcoin. So where you might see Bitcoin hit a 2x, you might see something like ExceedMe or a tiny microcap game that has the right narrative do something like a 20, 30, 40, 100x. Let me give you a real life comparison. So this is Solana. Back in the 2021 bull run when Solana was basically nothing, it was a brand new narrative, you can see the, let's take a price about here before Bitcoin started running. So you can see Bitcoin's at 10 grand and Solana, if we can click into the Solana here, is just over $2. Now, what happens? You can see Bitcoin moves way before Solana, that's the handle. And although it looks like it's moving further, I'll show you the prices in a second, it's just the graph, the way the graph is shown, Solana is moving much quicker than Bitcoin. So let's take the high here at about $55,000, so a 5.5x or we could even take it over here at the all-time high. Let's grab the Bitcoin price. So it's $64,000 here at almost the all-time high Bitcoin. So a 6.4x return from this point that we've measured. You can see Solana is lagging because it was at the really tail end of the whip, having a really small market cap. But by the time that it catches up, you can see Solana is priced at $194 or a 150x return over the same time period. But Bitcoin is the music. Bitcoin moves and then the alts move below it. And so I really want to share with you, and I think it's really important to understand these next 4 factors that is leading to the perfect storm that is making Bitcoin take off. The first, you're probably really familiar with this one. This has been the narrative really recently, and although the narrative was that the ETF was going to be approved, the stronger narrative is the ridiculous amount of demand that is currently out there in the more mainstream retail sector for Bitcoin now that they can access it through an ETF. So you can see Documenting Bitcoin wrote, Bitcoin ETFs are officially the most popular ETFs in Wall Street history. You can see they are the top 2 in volume after just 1 month of trading. You can come over here to the Dune Analytics, or Dune Analytics if you're American, D-U-N-E, just to make sure everyone's on the same page here. You can see that Bitcoin ETFs now hold 3.41% of the current Bitcoin supply. That is absolutely massive. They have over $31 billion of on-chain Bitcoin holdings. But it gets even crazier if you start to project this volume out. There's only 1.8 million Bitcoin available on centralized exchanges. And if you think about it, if you're not buying from a centralized exchange, they have to buy from people like me and you. And we don't have to sell our Bitcoin to them, which could leave them in a pickle. So they've got 1.8 million Bitcoin that they can potentially buy into. But they bought 10% of this in just 20 days. I mean, if we project that out, to buy 100% of this, it would only take 200 days. And then there's no more Bitcoin left on exchange. Now, of course, the market will just play out as markets play out, which means there will be Bitcoin on exchanges, but guess what? It'll be more expensive because it's more scarce, which means the price of Bitcoin will go up. And in fact, I actually saw another tweet, which was really intriguing. If BlackRock and Fidelity, 2 of the biggest fund managers in the world, want to put 1% of their managed funds into Bitcoin, just 1%, this would lead to 3.2 million Bitcoin being bought up. If you remember, there's only 1.8 million Bitcoin on exchanges. So you could imagine what would happen if they want to put 2 or 3% of the allocation towards something like Bitcoin. Now, the second factor, which is leading to this perfect storm, is something you've probably heard about, the Bitcoin halving. Now, I want to explain to you what this is in the simplest terms possible, and I think it's really important you understand this because this is going to inform your decisions and you're going to make way more money the more educated you are on crypto. Don't just be one of those people who roll in there and throw a bunch of 100 grand at some random gaming token, and normally like it'll 2x and they'll sit on it. They're like, I'm waiting for a 10x, and then they lose all their money. So just listen up for 20 seconds and I'll explain to you what the Bitcoin halving. So Bitcoin transactions are processed by people called miners. And the incentive to process these transactions are given in Bitcoin. So if you process enough transactions, the Bitcoin protocol will give you a Bitcoin in return. But approximately every 4 years, the reward for the miners for processing these transactions are halved. At the moment, 900 Bitcoin are given out every day in rewards, but after the halving, only 450 Bitcoin will be split among the miners processing these transactions. And of course, that means that the inflation of Bitcoin is halving. And again, there's going to be less supply, but demand is going to stay the same. And let me show you what that does historically. You can see the first halving was here in 2012. The Bitcoin price in the white here was $12. After the halving, it rose up all the way up to $884 from 12 bucks. The 2016 halving here, the price was lower than the all-time high. You can see it came back and accumulated here at $653 at the time of halving. Of course, the historic pattern post-halving up to $15,000. The most recent halving prior to this one, the price was at about $10,000 of Bitcoin. And of course, it went up into the $60,000 range. And now we're accumulating here. Going into this next halving, we're currently at about $48,000. And the projections, of course, if you follow this rainbow, are well up here. Even if you just reach the yellow band, which every single halving so far has reached the yellow band, you'd be sitting at $238,000 per Bitcoin. Now, the third factor, and this is one that I'm actually recently introduced to by House of Crypto, who apparently got it from Raoul Pal. And this is one I actually want to break down further because I don't fully have a comprehension of it. They're saying even bigger, the biggest influence possible, way bigger than the Bitcoin halving, is the global liquidity cycle. Meaning how much money is available in the economy, how little debt is out there, and therefore how much free cash is available for buying assets. And you can see right now, or actually let's go back to the 2020 bull run, this was when the liquidity was at an all-time high. You can see it ranging up to the 90 mark on this graph. And then of course we've had our bear market, our winter, but you can see recently, as you've seen with the price of Bitcoin, the liquidity has turned around as countries start printing money. You can see that China has printed 150 billion yuan. And finally, the fourth factor that is leading to somewhat of a perfect storm for Bitcoin is, of course, it is now an election year in the US. And I couldn't find the exact data, but I've heard a bunch of people on Twitter and YouTube talking about it, that election years outperform any other year because someone like Joe Biden wants the economy doing really, really well. So people are like, well, the economy's doing well, might as well put Biden back into power. The best data I could find for this, I just asked ChatGPT, do election years outperform non-election years in the stock market? Of course, Bitcoin really does follow the stock market. I would love for it to break away at some point in the future, but at the moment, it's pretty connected to it. And they said, yes, the average annual return during election years was approximately 11.49% in the last 50 years, where non-election years were 6.21%. And of course, I wanted to leave you with this from Walker. And this is sort of the overall long-term view. We're talking more short-term, months to a couple of years sort of cycle in Bitcoin. This is the next 50-year, 100-year outlook on Bitcoin. If you think this is a Bitcoin pump, just wait until the Fed turns on the money printer again. Infinite fiat money, infinite dollars. They can print trillions and trillions of US dollars, but you can't have more than 21 million Bitcoin. So when you get one scarce asset that is truly scarce against one that you can create out of thin air, the value is always going to flow into the harder asset.